Based on the historical data and forecast, Bitcoin shows a clear upward trend. The price has consistently broken through resistance levels and the forecast indicates continued growth. The RSI fluctuates, but generally stays above 60, suggesting bullish momentum. The Bollinger Bands have been widening, indicating increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We'll use a combination of RSI and Bollinger Bands for enhanced precision. The entry price will be $102,100 on May 9, 2025, Friday, when the forecast starts. The stop loss will be set at $100,600, just below the support level, to protect against unexpected downturns. The initial target price will be $106,300, aligning with the forecast for May 10, 2025. To maximize returns, we'll implement a trailing stop-loss strategy. Once the price reaches $106,300, we'll move the stop-loss to $104,000. If the price continues to rise, we'll adjust the stop-loss accordingly, ensuring we lock in profits while allowing for further gains. The final target price will be $113,300, the highest forecast price on May 15, 2025. This combined strategy leverages the upward trend, utilizes RSI to identify favorable entry points, and employs Bollinger Bands to gauge volatility and set appropriate stop-loss and target prices. This approach aims to capture significant gains while managing risk effectively. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has consistently been above the Bollinger Band center, and the RSI has recently moved into overbought territory, peaking at 77.8. The forecast for the next week projects continued upward momentum, with prices reaching $2,210. Considering these factors, I recommend a long position strategy. The entry price will be $1,960, coinciding with the start of the forecast period. A stop-loss order should be placed at $1,930, just below the recent high and the upper Bollinger Band, to limit potential losses. The initial target price is $2,030, aligning with the forecast for May 11, 2025. To maximize potential returns, we will implement a dynamic target strategy. Once the price reaches $2,030, we will move the stop-loss to break even at $1,960, securing the initial investment. If the price continues to rise, we will set a second target at $2,090, based on the forecast for May 13, 2025. Finally, a third target of $2,120 will be set for May 14, 2025. This tiered approach allows us to capitalize on the anticipated upward trend while managing risk effectively. The overall strategy combines technical indicators, forecast data, and support/resistance levels to create a high-probability, high-return investment opportunity. Based on the historical data and forecast, XRP shows a slight upward trend with consolidation around the 2.20 to 2.30 range. The RSI has fluctuated, indicating indecision, but has recently moved above 50, suggesting a potential bullish shift. The Bollinger Bands have been contracting, which often precedes a breakout. Considering these factors, I recommend a moderately bullish strategy. We'll initiate a long position at $2.22, coinciding with the support level. To manage risk, place a stop-loss order at $2.18, just below the lower Bollinger Band. Our initial target price will be $2.30, aligning with the recent resistance level and the upper Bollinger Band. To capitalize on the forecasted upward movement, I propose a tiered target strategy. If the price reaches $2.30, take 50% of the position and move the stop-loss to the entry price of $2.22 to secure profits and reduce risk. If the price continues to rise, a second target price is set at $2.32, based on the forecast. If the price reaches $2.32, close the remaining position. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while mitigating downside risk. The portfolio is weighted towards this strategy due to its strong confluence of technical indicators and price action. Based on the historical data and forecast, BNB shows a potential for upward movement. The price has been fluctuating within a range between $586 and $637, with a recent breakout above the $600 mark. The RSI has been oscillating, indicating indecision, but recently moved above 50, suggesting a shift towards bullish momentum. The Bollinger Bands have been narrowing, indicating a period of consolidation, followed by a recent expansion, suggesting increased volatility and potential for price movement. Considering these factors, I propose a long position strategy. The entry price should be $618, coinciding with the support level and a potential bounce back point. The stop loss should be placed at $586, just below the recent low and the bottom of the Bollinger Bands, to limit potential losses. The initial target price should be $637, the resistance level. If the price reaches this target, we can consider moving the stop loss to break even and setting a second target price of $652, based on the forecast data for May 9, 2025. This strategy combines support and resistance levels, RSI signals, and Bollinger Bands expansion to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a strong upward trend. The price has consistently tested the support level of $150 and bounced back, with a significant surge to $164 on May 8. The forecast for the next week projects continued growth, reaching $169. Considering the RSI nearing overbought territory at 70.7 on May 8, a strategic approach is to capitalize on potential pullbacks while maintaining an overall bullish stance. I recommend a tiered entry strategy. Initially, enter a long position at $156, with a stop loss at $153 to mitigate downside risk. The first target price is $162, and the second target price is $169. To refine this strategy, we will integrate the Bollinger Bands. When the price touches the lower band, around $135, it signals a potential buying opportunity. However, given the current upward momentum, the primary focus remains on the initial long position. If the price reaches the upper band, around $159, it suggests a potential short-term overbought condition. In this scenario, consider taking partial profits and adjusting the stop loss to protect gains. The portfolio will prioritize the initial long position at $156 with a stop loss at $153 and target prices of $162 and $169, incorporating opportunistic adjustments based on Bollinger Band signals for enhanced risk management and profit optimization. Based on the historical data and forecast, Dogecoin shows a slight upward trend with periods of consolidation. The RSI fluctuates between 48.4 and 67.4, indicating both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, but the forecast data indicates a potential breakout. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands to maximize returns. We will initiate a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $0.155. The stop loss will be set just below the lower Bollinger Band at $0.153 to limit potential losses. The target price will be determined by the resistance level of $0.251, offering a substantial profit margin. Additionally, we will implement a trailing stop-loss strategy, adjusting the stop-loss upwards as the price increases, to secure profits and protect against sudden reversals. The forecast data suggests a price increase to $0.201, which will serve as an initial target. If the price reaches $0.201 without hitting the resistance, we will reevaluate the situation and consider holding the position further, adjusting the stop-loss accordingly. This combined RSI and Bollinger Band strategy, coupled with a trailing stop-loss, offers a balanced approach to capitalize on the potential upward trend while mitigating risks. Based on the historical data and forecast, Cardano shows a fluctuating trend with a recent upward momentum. The RSI indicates that the asset is currently approaching the oversold territory, with a reading of 46.7 on May 8, 2025. Considering the forecast prices, which predict an upward trajectory, I propose a long position strategy. Entry price should be 0.663 plus $0, placing a stop-loss order at 0.617 plus $0, just below the lower Bollinger Band, to mitigate potential losses. The initial target price is set at 0.741 plus $0, aligning with the upper Bollinger Band and a reasonable profit margin. To capitalize on the predicted upward trend, we will implement a dynamic strategy. If the price reaches the target of 0.741 plus $0, we will move the stop loss to the entry price of 0.663 plus $0, securing profits and protecting against a potential reversal. If the forecast continues to be positive, we can consider adjusting the target price to 0.778 plus $0, maximizing potential gains. This approach combines RSI oversold signals, Bollinger Band breakouts, and forecast data to create a high-return investment strategy with calculated risk management. Based on the historical data and forecast, TRON shows a slight upward trend. The price has been fluctuating within a range between $0.244 and $0.257. The RSI indicator fluctuates between 50 and 62, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting a period of consolidation, but the forecast suggests a potential breakout above the current resistance. Considering these factors, I propose a moderately bullish strategy with a focus on capitalizing on the anticipated upward movement. My strategy involves a long position with an entry price of $0.254. We will place a stop-loss order at $0.248, just above the support level, to limit potential losses. The initial target price will be $0.261, aligning with the forecast price for May 12, 2025. If the price continues to rise, we will adjust the stop-loss to break even and consider a second target price of $0.267, corresponding to the final forecast price. This strategy combines trend analysis, RSI readings, and Bollinger Bands predictions to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Sui shows a clear upward trend, especially with the recent surge to $4.02 and the forecasted prices above $3.80. The RSI consistently remained above 70, indicating overbought conditions, but the price continues to climb, suggesting strong bullish momentum. The Bollinger Bands are expanding, confirming the increasing volatility and potential for further price increases. Considering these factors, I recommend a long position strategy. Entry price will be $3.84, placing the stop loss at $3.65, just above the support level, to protect against potential pullbacks. The initial target price will be $4.41, aligning with the forecast for May 15, 2025. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 80, it suggests a potential pullback, and when it rises above 20, it indicates an oversold condition. However, given the current strong trend, we will focus on the Bollinger Bands. If the price touches the lower band, it's a buy signal. If the price touches the upper band, it's a sell signal. For this strategy, I suggest an initial long position at $3.86, with a stop loss at $3.65 and a target price of $4.41. If the price reaches $4.41, consider taking partial profits and setting a trailing stop loss to lock in gains and protect against a sudden reversal. This blended approach combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Chainlink shows a potential for upward movement. The RSI has been fluctuating but recently crossed above 60, indicating increasing momentum. The price has been testing the support level of $15, and the forecast suggests a gradual increase over the next week. Considering the Bollinger Bands, the price is currently near the upper band, suggesting a potential pullback before further upside. Therefore, I recommend a long position with an entry price of $14.8. A stop loss should be placed just below the support level at $14.5 to mitigate potential losses if the price reverses. The target price for this trade is set at $16.1, aligning with the forecast high and the resistance level. This strategy combines the momentum indicated by the RSI, the support level, and the forecast price movement. To manage risk, I suggest a position sizing that allows for a 2% maximum drawdown. This portfolio will be a combination of the three strategies, with the RSI strategy being the primary driver for entry and exit points, while the Bollinger Bands will be used to confirm potential pullbacks and adjust stop-loss levels. The support and resistance levels will be used to define the overall trading range. Based on the historical data and forecast, Dogwifhat shows a clear upward trend. The RSI consistently stays above 50, indicating bullish momentum, although it has briefly entered oversold territory. The forecast prices predict a continued rise, with the price expected to reach $0.744. Given this, I recommend a long position strategy. Entry price should be set at $0.658. The stop loss should be placed just below the support level at $0.642, set at $0.639 to protect against potential pullbacks. The initial target price is set at the resistance level of $0.759. To refine the strategy, we incorporate the Bollinger Bands. The price has been trending towards the upper band, suggesting a continuation of the upward movement. I recommend scaling out the position as the price approaches $0.724, taking partial profits. If the price breaks through the resistance level of $0.759, I would increase the target price to $0.78. This strategy combines the momentum from RSI, support and resistance levels, and the price action within the Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Sui shows a clear upward trend, especially with the recent surge to $4.02 and the forecasted prices above $3.80. The RSI consistently remained above 70, indicating overbought conditions, but the price continues to climb, suggesting strong bullish momentum. The Bollinger Bands are expanding, confirming the increasing volatility and potential for further price increases. Considering these factors, I recommend a long position strategy. Entry price will be $3.84, placing the stop loss at $3.65, just above the support level, to protect against potential pullbacks. The initial target price will be $4.41, aligning with the forecast for May 15, 2025. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 80, it suggests a potential pullback, and when it rises above 20, it indicates an oversold condition. However, given the current strong trend, we will focus on the Bollinger Bands. If the price touches the lower band, it's a buy signal. If the price touches the upper band, it's a sell signal. For this strategy, I suggest an initial long position at $3.86, with a stop loss at $3.65, and a target price of $4.41. If the price reaches $4.41, consider taking partial profits and setting a trailing stop loss to lock in gains and protect against a sudden reversal. This blended approach combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, reserve rights shows a slight upward trend with periods of consolidation. The RSI fluctuates between 53.6 and 67.0, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a potential breakout. The forecast data projects a continued upward movement, with prices expected to reach $0.0103. Considering these factors, I recommend a moderately bullish strategy. We will implement a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. The entry price will be $0.00956 on May 9, 2025, coinciding with the first forecast data point and a slight dip from the previous day's close. The stop loss will be set just below the support price at $0.00937 to protect against a sudden reversal. The initial target price will be $0.0101, aligning with the upper Bollinger Band and a key resistance level. If the price reaches this target, we will move the stop loss to the entry price and set a secondary target of $0.0124, the next major resistance level. This strategy aims to capitalize on the predicted upward trend while mitigating risk through strategic stop-loss placement and adaptive target adjustments. Based on the historical data and forecast, Ethereum name service exhibits a strong upward trend, particularly evident in the recent price surge to $21.9. The RSI consistently above 50, reaching 76.7 on May 8, suggests bullish momentum, though nearing overbought territory. The Bollinger Bands have been widening, indicating increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. Specifically, enter a long position at $20.1, placing a stop loss at $18.9 to protect against a potential pullback. The initial target price is set at $22.7, aligning with the forecast for May 15. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI falls below 60 and the price touches the lower Bollinger Band, it indicates a potential buying opportunity. However, with the current upward trend and forecast, maintaining the long position at $20.1 with a stop loss at $18.9 and a target price of $22.7 remains the most efficient portfolio. This strategy capitalizes on the projected price increase while mitigating risk with a clearly defined stop loss. The overall portfolio will be 80% long Ethereum name service and 20% cash. Based on the historical data and forecast, Ethereum shows a clear upward trend. The price has consistently been above the Bollinger Band center, and the RSI has recently moved into overbought territory, peaking at 77.8. The forecast for the next week projects continued upward momentum, with prices reaching $2,210. Considering these factors, I recommend a long position strategy. The entry price will be $1,960, coinciding with the start of the forecast period. A stop-loss order should be placed at $1,930, just below the recent high and the upper Bollinger Band, to limit potential losses. The initial target price is $2,030, aligning with the forecast for May 11, 2025. To maximize potential returns, we will implement a dynamic target strategy. Once the price reaches $2,030, we will move the stop loss to break even at $1,960, securing the initial investment. If the price continues to rise, we will set a second target at $2,090, based on the forecast for May 13, 2025. Finally, a third target of $2,120 will be set for May 14, 2025. This tiered approach allows us to capitalize on the anticipated upward trend while managing risk effectively. The overall strategy combines technical indicators, forecast data, and support/resistance levels to create a high-probability, high-return investment opportunity. Based on the historical data and forecast, Lido DAO shows a volatile trend with recent upward momentum. The RSI values have fluctuated between 44.1 and 67.1, indicating periods of oversold and overbought conditions. The Bollinger Bands suggest increasing volatility, with the price recently approaching the upper band. Considering the forecast prices, which predict a continued upward trend towards $0.964, I recommend a long position strategy. The support price of $0.86 acts as a potential floor, while the resistance price of $1.07 represents a significant upside target. My proposed strategy involves entering a long position at $0.875. Given the recent volatility and the potential for a pullback, I will set a stop-loss order at $0.835 to limit potential losses. The primary target price will be $0.964, aligning with the forecast and the previous resistance level. To capitalize on further upside potential, I will set a trailing stop-loss at $0.90, allowing the position to remain open as long as the price continues to rise. This approach combines the momentum from the forecast with risk management techniques to maximize potential returns while minimizing downside exposure. Based on the historical data and forecast, Uniswap shows a recent downtrend followed by a potential reversal. The RSI has moved from oversold territory, below 34.5 to approaching overbought levels, 62.8, suggesting increasing bullish momentum. The Bollinger Bands also indicate a potential shift, with prices moving towards the upper band. Considering these factors, I recommend a long position with an entry price of $5.39. A stop loss should be placed at $4.67 to limit potential losses if the downtrend resumes. The initial target price is set at $6.11, reflecting the recent high and potential for further upside. To optimize the portfolio, I propose a layered approach. First, initiate a long position at $5.39 with a stop loss at $4.67 and a target price of $6.11. Subsequently, if the price reaches $6.11, consider taking partial profits and setting a trailing stop loss to protect gains. Another long position can be considered at $5.33 with a stop loss at $4.69 and a target price of $5.87, capitalizing on any potential pullbacks. This combined strategy balances risk and reward, aiming for high returns while managing potential downside. Based on the historical data and forecast, Pudgy Penguin shows a clear upward trend. The RSI consistently remains above 70, indicating overbought conditions, but the price continues to rise, suggesting strong buying pressure. The Bollinger Bands have been expanding, confirming the increasing volatility and momentum. The forecast predicts further price increases, reaching $0.0154. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.0129, placing a stop-loss order at $0.0104, just below the established support price. Our initial target price will be $0.0145, aligning with the forecast high. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. When the RSI dips below 80, overbought, it signals a potential pullback, offering a favorable entry point. If the price touches the lower Bollinger Band, it indicates an oversold condition and a potential buying opportunity. Therefore, we will adjust our strategy to be more dynamic. We will enter a long position at $0.0129, with a stop loss at $0.0104. If the price reaches $0.0145, we will take partial profits and move our stop loss to break even. We will hold the remaining position, targeting $0.0154, the forecast high. This combined approach leverages both momentum and volatility indicators for optimized returns. Based on the historical data and forecast, Ethena has shown a significant downtrend from late April to early May, with a recent bounce but still below the resistance level of $0.351. The RSI consistently dipped below 50, indicating weakening momentum, and recently reached oversold territory around 35, suggesting a potential for a short-term rebound. The Bollinger Bands show that the price has been trading within a narrow range, with the lower band consistently tested. The forecast for the next week indicates continued volatility, but with potential for upward movement, particularly on May 15, 2025, with a forecast price of $0.328. Therefore, I recommend a strategy combining RSI and Bollinger Bands to capitalize on this potential rebound, while mitigating downside risk. My recommended strategy is to initiate a long position when the RSI crosses above 30 and the price touches the lower Bollinger Band. Specifically, enter a long position at $0.299. Set a stop-loss order at $0.286, just below the recent support level. The initial target price should be $0.331, aligning with the support price. If the price reaches $0.331, consider moving the stop-loss to break even to protect profits. If the price continues to rise and breaks above the $0.351 resistance, increase the target price to $0.351. This approach combines the oversold signal from the RSI with the volatility indicated by the Bollinger Bands, aiming to capture a short-term upward correction while limiting potential losses. Based on the historical data and forecast, Pepe shows a slight upward trend. The RSI consistently fluctuates, nearing the overbought territory recently, indicating potential for a pullback. The Bollinger Bands suggest that the price is currently near the upper band, which could signal a potential short-term correction. Considering these factors, I propose a strategy that combines elements of both trend following and mean reversion. We will initiate a long position at $0.0000960, anticipating a continuation of the upward trend, but with a protective stop loss at $0.0000870 to mitigate potential losses if the price reverses. Our target price will be $0.0001070, aligning with the forecast and allowing for a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we'll re-enter a long position at the lowest price within that oversold period, setting a stop loss slightly below the recent low and a target price near the upper Bollinger Band. Conversely, if the RSI exceeds 80, signaling an overbought condition, we will consider a short position at the highest price, with a stop loss above the recent high and a target price near the lower Bollinger Band. The most efficient portfolio will prioritize the long position strategy given the prevailing upward trend, with the RSI and Bollinger Band strategies acting as secondary adjustments to optimize entry and exit points.